Hello value investors, thank you for joining me. In today's video, I'm going to talk about Pinterest. Why I believe that although it is trading at close to all-time lows, has bounced off slightly, but nevertheless, why I believe that there's not enough upside potential even now. So if you're new to the channel, please subscribe now so you can get my next video installment. Let's get started.
So as I stated throughout, I'm not as bearish on Pinterest as I was previously, but there is the undeniable revenue deceleration rate going on here. So you can start to see this going back further than 2019, but looking in the rearview mirror doesn't afford you much insight. We know that this has been happening, this deceleration in revenue growth rate, for some time. What's critical is to understand that this was happening before COVID. So before any kind of damage to the economy, it was already in a state of the deceleration. It was already mature in the business model.
So as a reminder, it's important to understand how Pinterest's revenues are made up. They are an advertising platform, and the way their revenue is recognized is through a combination of clicks, impressions or views, or watching videos. So if you're familiar with the advertising market at the moment in the United States, many of their peers are struggling. For example, Alphabet or Facebook, even Snap. So the whole market is struggling, the whole sector is struggling. Further compounding its troubles, as we can see, is that the company is barely profitable on an EBIT metric. Now this is an adjusted metric which adds back stock-based compensation, but essentially what you're seeing here is that in 2018 and 19 it went from being unprofitable, and it then had a very strong year relative to 2018, but then in Q1 has become unprofitable again. Now, as it says in the letter, Pinterest doesn't make that much in terms of bottom line profitability from having more users. It really has more profitability from having more revenue. There's a slight difference there. So it's really about being able to price each user rather than having more users. More users doesn't mean necessarily, in the case of Pinterest, stronger bottom line profitability. It does help, but it also weighs significantly in terms of costs. So you can think of it that the amount of infrastructure that it needs to support a larger user base. So as we discussed, it's not that expensive, Pinterest, relative to the market at present. So you got here some of its peers, and you can get quite a lot of bargains at the moment. I don't have any positions here, but you can get quite a lot of bargains within Facebook and Alphabet. These ones have definitely come down over the last quarter or so, and Pinterest has also come down. Now, it is difficult to argue that Pinterest, in my opinion, is meaningfully undervalued. Conversely, it's difficult to claim that it's crazily overvalued, because it has definitely come down significantly. It's no longer at all-time lows, but it's pretty low. So the sentiment that investors have towards Pinterest is not particularly strong. So whenever investors feel particularly uninterested towards a company, it can often mean that there is upside potential. having said that, you have a company that has really no ability in the foreseeable future of turning its revenues into profit. So its revenues are just vanity, really, and it becomes quite difficult to make a compelling argument that the stock is undervalued. So to summarize, we've just seen that its revenue growth rates are declining, and we've seen that it lacks a true path towards profitability. For now, the advertising market is quite weak. There is a strong expectation that it would bounce back by Q3 or maybe Q4. Will Pinterest benefit? Most likely, yes. Is that expectation priced in? That's the difficulty. I believe to a certain extent it is, because investors haven't really had to deal with that second quarter results, where we know for the month of April revenue is down 8% year over year. Now, Pinterest points out that last year, in 2019, they had the extra Easter month, extra Easter week, and that really benefited last year's revenue growth rate. So in comparison this year, they believe that you can probably add back 1 or 2% in terms of it coming out as negative 6% for the month of April versus negative 8%. However, this is a company that is supposed to be a high growth company. So investors are paying a high multiple for the expectation of high growth. So, as we said, paying 9 times sales for an unprofitable company that has a quarter of negative growth, it's difficult to make a compelling argument that it's undervalued. So I hope you found this video useful, and I'll see you next time.